Bismillah ar-Rahman ar-Rahim. I welcome you all in another session arranged by Northern Regional Committee, CPD Industry and Technology on IFRS 16, ESG and IASB vision. We will commence this session with Tilawat-e-Kalam Pak. Please, I request the team to play the Tilawat.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الرحمن علم القرآن خلق الإنسان علمه البيان الشمس والقمر بحسبان والنجم والشجر يسجدان والسماء رفعها ووضع الميزان ألا تطغوا في الميزان وأقيموا الوزن بالقسط ولا تخسروا الميزان والأرض وضعها للأنام فيها فاكهة والنخل ذات الأكمام والحب ذو العصف والريحان فبأي آلاء ربكما تكذبان خلق الإنسان من صلصال كالفخار وخلق الجان من مارج من نار فبأي آلاء ربكما تكذبان رب المشرقين ورب المغربين فبأي آلاء ربكما تكذبان صدق الله خالقنا المولانا العلي العظيم.
Jazakallah ji. Now moving towards the national anthem, I will request all the participants to please stand for the national anthem. Thank you, Ji. Now moving towards the session. This session is on IFRS 16. As you all know, after the incorporation coming of the IFRS 16, the things have changed in the lease sector. It has changed each and everything. It has affected all the industries. During the current audit tenure, audit season, we have faced most problems relating to the leases, how to recognize these leases, especially in a telecommunication sector, banking sector, and other related sectors, and in the food chains, which have multiple outlets. Each and everywhere we have faced number of problems relating to the recognition criteria of IFRS 16. And now it's the time we need to understand, based on the examples, that what IFRS 16 want from us and how to incorporate the new changes relating to that. Along with that, a new hot topic, the world have changed. Recently, a Forbes has written an article relating to an industry of Pakistan based in Faisalabad about new changes which they have adopted relating to the carbon emission and other things. Now, they have also in IASB vision that environmental, governance, and social factors need to be addressed. Now, there might be new standards coming related to social changes and environmental and governance. So we need to learn about it. What is the IASB vision relating to these things, and how we are going to cope to it? Either we are in the industry or in practice, we need to adopt the new changes and get ready for the new changes which are coming in our side, especially these sectors related to export, either they are in the services or in the manufacturing, are going to be affected by these things. Now, we have a very known presenter with us, Mr. Muhammad Najmus Saqib. He is a chartered accountant, member of the ICAP and ICAW and SIFA. Najam Saab is a senior director in DHL Global Finance Team in Bonn. His career started with PwC in Pakistan and Dubai offices. He then joined DHL in Dubai as head of accounting for Middle East. Later moved to Germany in 2008. He has held various roles in the finance, like controlling business finance, transfer pricing, and then also a head of governance for DHL UK. He is currently with us for this session, and I would like to welcome Mr. Muhammad Najmus Saqib for the great presentation coming ahead related to IFRS 16, ESG and IASB vision. I welcome Mr. Muhammad Najmus Saqib. Please, sir.
Assalamu alaikum. First of all, a very warm welcome to all of you, and thank you very much, sir, for the very kind introduction. And I will try to earn this in the next 2 hours. I think we have 2 hours, right? Absolutely. So first of all, I think like as just Mr. Ahmed mentioned, yeah, like there are lots of things happening on the horizon of IASB, and also in the investors market as well, especially in relation to the sustainability. And I think today, like what we are going to cover is somehow combination of certain accounting topics, and also like to see a kind of high level overview on the sustainability roadmap. Yeah. Just, I think as a brief introduction, I will just skip this one because Mr. Ahmad has already kindly introduced me. First thing I want to start here is like why I chose the word coffee with an accountant. I think it's a bit away from accounting, really bit away from accounting. This idea came to me, I think in 2020, when we were all hit by COVID, right? It was like a mega event for the century, right? I think everyone will agree, right? We haven't seen this kind of event in our entire lives. Yeah, the whole spectrum of the life has changed. And if you see, like the life has actually, it became very, very fast. And sometimes, yeah, like when you are in a fast pace of life, for example, I'm not sure if you people have seen how the Formula One cars are running on the tracks. Huh? They are doing leaps and leaps and leaps. The thing is, they all need at least the pit stop visits, right? They have to stop for a while. Yeah, they need a bit of tuning, bit of tire change, oil change, and all. So this is something which COVID has actually provided us. So we were all very, very busy with our professional lives, with our personal lives, with the social lives, and COVID, it stopped everything, right? And I'm not sure how strict the restrictions were here in Pakistan, or at least in Europe, we were quite badly hit. I was supposed to travel to UK in the beginning of 2020, and yeah, suddenly I was told that everything has to be done remotely. I said, wow, I have only met my team once. We need to hire 2 more people, and how it's all gonna be possible? actually gave me one very, very important lesson. I think human beings are the most adaptable creatures in the entire universe. Yeah, we changed ourselves so rapidly. Yeah, everything was moved to Zoom, online platforms. Yeah, people started learning work from home. Kids were given the lessons at home. So everything changed in just a couple of weeks or couple of months time. Yeah, that proved the resilience of the humanity, right? One challenge which though persisted was the social connection, right? Social connection is also very, very important. Social connection, yeah, physical interaction is a big contributor to that, but certainly you can have the social connection even without the physical touch. And that actually gave me the idea, why not to start some sessions across my company to remain connected with my other colleagues. Yeah, and we said, let's try to have virtual coffees. Yeah, so every day we were holding our cups, discussing some topic of interest, especially from the news or some other developments. And yeah, and that gave the birth to this idea of coffee with an accountant session. I hosted a couple of sessions. Yeah, I think I would say many. And why I chose the word coffee, I think that came from Swedish tradition. Swedes, they are very particular about the coffee breaks. They call this as fika. Don't confuse this with the lassi shop in Gawal Mandi. It's like tradition in Sweden, yeah. So the companies, they are legally bound to give the coffee breaks to their employees. Yeah. And that actually improves the mental well-being of the employees there. It has a very positive impact on the sickness rates. It has significantly reduced the accident rates in the production facilities. And what they do, they try to get together, 3-4 people, they go to some nice coffee shops across the office. They try to eat different type of cakes. They start with the one which they least like and moving on to the one which they like the most. And that is why I thought that it will be a good name to these sessions, coffee sessions. Yeah, just to give you a little bit of background why you see this as coffee with an accountant title to this presentation. Okay, so what are we gonna do today? I know that it's quite professional forum, so you people have very, very busy routine, and that's why I will rather. Why it's not moving? Excuse me. The slides are no. Oh, okay, good. So first we will just very, very briefly touch on the basics of IFRS 16, the basics. I did the session, I think, few years back, I think in 2017, when the implementation of IFRS 16 was like somehow on the horizon. And in Europe, we were the first company who implemented IFRS 15 and 16 ahead of the schedule. And I was part of the global implementation team. And I have shared the practical challenges in the sessions which we conducted in ICAP Lahore and Karachi. So I will just briefly cover the basic concepts of leasing. Then we will move to more, I would say advanced topics. Yeah, what kind of challenges you can see during your practical experience while dealing with IFRS 16. Yeah. Then I think this is quite, I'm not a, oh, I'm sorry. Then we will touch upon ESG, few more on accounting special topics. And then later on, we will see if we will have time, we will cover your questions. If not, then I will share my email address, my WhatsApp. Please feel free to contact. Now, the focus for me today would be to really cover the content first. And then we will see that if we will have time, we will have more interaction among ourselves, right? So everyone so far okay with the agenda? Good. Okay, so IFRS 16 basics. Yeah, how this whole journey started. Sir David Tweedy, he wanted to fly on an airplane which is on the airline's balance sheet. Yeah, unfortunately, IAS 17, the conventional one, it had lots of limitations. Yeah, so we were treating the same transaction with the same economic substance in two different accounting ways. Operative leases were off the balance sheet, finance leases were on the balance sheet. All the other economic substance was the same for both the transactions, right? And this is the gap which was always bothering the accounting community. And Sir David Tweedy, he was one of the big promoter to somehow find a way that all the leases could be brought onto the balance sheet. Yeah, he said most of the airlines, they try to take the leverage and they take the benefit of this IAS 17, and most of the aircrafts which they fly are not appearing on their balance sheets. Yeah, so the balance sheets were much lighter as they should be. So yeah, just to give you a bit of picture that how it was in IAS 17 and what was changed under IFRS 16. So you can see in IAS 17, we used to have these two classifications, and then we moved to right of use model under IFRS 16. So which means everything which had to do with leasing was somehow brought onto the balance sheet, right? So just again, very, very briefly, what is in the scope, what is out of the scope. So like intangibles or licenses are not covered in IFRS 16. So these are more covered under your IAS 38, and you can see the revenue recognition guideline under IFRS 15. Again, unfortunately, IAS 18 had a couple of practical limitations. It was a very, very old standard, was quite obsolete. Software development houses, many service industries faced lots of issues while looking for some concrete guidance, on how to recognize the revenue for these type of contracts. Yeah, and most of the time people were actually referring to the US GAAP. Okay, IFRS 15 at least has addressed most of the questions. Short-term leases, low value assets. Yeah, you can use the practical experiment exemption there, and yeah, you can take them off the hook. I'm not sure what's happening here. Okay, thank you. Oh my goodness, I think I'm the more advocate of the classic laptop buttons. Good. Welcome back. Okay, so yeah, we just took a quick break for the prayers. So yeah, we will now start from where we just left. If you see on this slide, yeah, there are three, I think, basic concepts which are somehow governing a lease contract, which basically makes a lease contract. So first thing is that there has to be an identified asset, right? Identified asset, and there are a couple of criteria which have to be met. For example, like just the lessor, he cannot easily just substitute the asset, right? So there's one thing. And second thing is, like, although he may be able to substitute the asset, but he should not have the real economic benefit from that, right? Second thing is that the contract should convey the right to control the use of the asset. Please bear in mind the word use. We will see why it is important. I will explain this in my coming slides, why I'm emphasizing the word use, okay? And when we say what is the right to use the asset, then we have to see that if the lessee who has obtained the control over the use of the asset can get the economics benefit out of it, or is he getting the full economic benefit out of it? For example, if he has leased a truck or a plane, you know, is he accessible? The whole capacity is accessible to him. And second thing is that is he able to direct the use of the asset, right? For example, at what time the aircraft will fly, on which route the aircraft will fly, you know, so these type of things. Then the other aspect which is important to establish the value of your asset and liability is basically also the period of time in exchange of consideration, right? So the lease term is also very, very important. The longer the lease term would be, the more value is going to be assigned to the asset and to the liability. More heavy the balance sheet will become, right? So I think what we are going to cover in the coming slides, I will try to focus on the practical issues which most of the organizations do face when it comes to, you know, to the assessment of these critical concepts which are somehow defined in IFRS 16. I will not spend too much on these slides because I want to go to the advanced session. This is just a flow chart just to see if there is no identified asset, then it's a service contract. And service contract need not to be on the balance sheet, right? What is the reason? What is the reason? Sorry? No. The thing is that because you do not have the underlying asset, right? And service contract is more like an obligatory contract where both the parties have done they have fulfilled their obligations up at the same level, right? So if you do a prepayment, then it will be on the balance sheet. If you have a liability from a service contract, it will be on the balance sheet. But if you settle your rights and obligations on a monthly basis, you do not have an underlying contract. Maybe the contract will run for the next 5 years, but it's an obligatory contract. An obligatory contract needs not to be on the balance sheet as per the conceptual framework to IFRS, right? Okay, so substantive substitution rights, as I just mentioned very, very briefly. So basically, sometimes there are rights. Yeah, for example, if you lease a vehicle with a service contract, it may say that at the time of breakdown, you will get a replacement vehicle. But this is on an occurrence of a certain event. It's not substantive substitution rights. Okay. Also, the thing is that, for example, it may be defined in the contract here. For example, I want to lease an aircraft, okay, and the lessor, it has only one aircraft. Although it may be there in the contract that he has the right to substitute the aircraft, but he does not have the practical ability to do that, right? So it will become a lease contract. But at the same time, let's take an example. You have a fleet of aircrafts, okay, and you want to enter into the maintenance contract, because for the aircraft, the engine requires a regular maintenance. Yeah, it becomes a complete junk after maybe 2 years, right? And most of the airlines, they go to then General Electric or Rolls-Royce, depending on what type of engine you have. It can also be possible that you do a framework agreement with either GE or with Rolls-Royce, and they give you the access to their pool of engines. Yeah, so which means whenever a replacement needs to be done, they will simply change the engine and the aircraft is keep on running. Usually these contracts are very, very heavy contracts. Yeah? For example, for a big airline, it could worth $500 million, because these are long-term contracts, and usually it requires very, very complex calculations. Actuarial studies are also needed. Yeah, so these type of complex calculations, which are supported by the actuarial assumptions, but the criteria of IFRS 16 still remains the same. Do you have an identified asset? If yes, yeah, you have an engine, right, which is mounted on the plane. But at the same time, the supplier has the substitutive rights, which are substantial. Because what happens, for example, Rolls-Royce wants to sell an engine which has a life cycle of 6,000 hours or whatever, right? And the thing is, it may be mounted on one of your planes. They can always call back that engine, and they will mount another engine which has a life of 2,000 cycles, right? So in this case, the right to substitute an asset is substantive. And just see, because of these technicalities, $500 million contract will not be on your balance sheet. It will become a service contract, right? Just if Rolls-Royce will not have that practical capability to replace the engine so quickly, then the whole thing will be on the balance sheet, right? So these type of technical assessments are definitely sometimes required, but the criteria of IFRS 16 is just the same. You need to establish, is there an identified asset, whether you are dealing with a contract which involves only one car, or you're dealing with a contract which has a life of 15 years and requires actuarial assumptions, has a potential value of $500 million, you know. So these are the basic things which certainly, if we study the IFRS 16 well, then certainly I would expect that most of the problems can be solved, right? In the coming slides, I will tell you like how beautifully IASB has chosen the words, how beautifully, right? So substantive substitution rights, as I just explained from my example, physical distinction is also very, very important. For example, sometimes you could have access to a large asset, but your capacity can be interchanged. For example, access to certain data transmission lines, right? Where, yeah, you don't know, like if this particular cable will be used for your data transmission. If that is not the case, then it's just a service contract. And important aspect to note here is that if you cannot establish whether the right to substitute an asset is substantive or not, then take the assumption that these are not substantive and put the things on the balance sheet, right? This is what the IASB has expected from us. Oh, yes, so basically, taken to the balance sheet when it becomes available to the lessee, right? It's not the inception date, it's the commencement date, right? When the asset will become available to you. For example, I can have a contract with Boeing to lease an aircraft, and I may start negotiating with them. They may start producing the aircraft, but the right of use asset will only be accounted for when the aircraft will be delivered to me, right? Okay, so again, I will not spend much time on this one, just very, very briefly. So options have to be assessed and included in your lease term. If you have a reasonable certainness that lessee will avail those options to extend or not to terminate, right? And the whole concept here is that we should not understate the balance sheet, right? The things which we are legally, economically obliged, not legally, economically obliged, should be on our balance sheet. Yeah? There are certain facts which we need to consider while making this assessment. For example, if you have leased a building, contract is for 5 years, but you have put lots of heavy investments on the leasehold improvements, right? It will be foolish to put the assets which have useful life of 20 years on a lease contract of 5 years, right? Then there will more likely or most likely use the property for the next 20 years, right? This is how the assessment has to be done. So it's always a holistic assessment of all the available facts and circumstances. This is not a legal assessment. Yeah, IFRS is always driven by the substance. Okay, so enforceability. First of all, enforceability is not defined in IFRS, right? It's not a legal concept. It's an economic concept. Yeah. And enforceability has a direct linkage to penalty. It has to be linked with the penalty when you're making the assessment for IFRS 16. So yeah, you can see, that's why I marked penalty in red. Yeah. So which means if both the parties, evergreen contracts, yeah, very, very common in some of the countries, evergreen contracts, yeah, or the contracts which are cancelable at will by both the parties. But the problem here then is to assess if there is really insignificant penalty. If there is a significant penalty, both the parties may have the right to cancel the contract at any point of time, but that does not qualify the lease to be a cancelable lease. It has to be on the balance sheet, right? Where only lessee has the right, then definitely it has to be the internal assessment. Like, for example, what kind of leasehold improvements we have made there? Is this building critical to the lessee's operations? For example, if I have a lease for an airside facility, then certainly for a transportation company, it's a critical building. Unless and until I have another replacement plan, I should not remove this asset from my balance sheet. Only lesser, then again, lessee should has to take the assumption that lesser will grant the extension, and that period has to be covered in your lease term. Okay. So far, you people are with me, right? Yes? No? Maybe? I'm sorry, yeah, like after 5:30, 6 o'clock, such a long day at work, and now listening to all this, I wouldn't say crap, but very dry subject. Okay, so again, I think I will not go into too much details here because I really want to focus on this section. Beyond the basics, right? The first part was just to set the stage, right? Again, I'm not going to discuss lots of concepts here. I will try to focus on two aspects: penalty and the lease term. Okay. Devil is always in the details. This one, always my lawyers, they always tell me the same, this thing. Yeah, they say, oh, looks good to the accountants, but for lawyers, they have to assess this from a different perspective. Okay. Okay. So is it a lease or a purchase? Actually, IFRS 16 is quite silent on this. For example, you go to a manufacturer and you say, I want to lease a vehicle. Are you really leasing a vehicle, or is it a simple hire purchase contract? How would you differentiate between these two? Any idea? And IFRS 15 also says that if a contract has a repurchase option, then it could be considered as a sale under IFRS, sale and leaseback transaction, or sale or repurchase transaction under IFRS 15, you know. Interesting assessments, right? Okay, so which means, let's try to see, look at this together. Okay, so which means IFRS 16 does acknowledge that any contract where the title will be passed on to the lessee can be a lease. Yeah, but it does not mean every contract where the title is going to pass to the lessee or to the purchaser will be a lease, right? So any contract with a forward where the sale of the underlying asset does not result in such an arrangement is merely a sale purchase contract in the scope of IFRS 15. So we need to also watch out the implications of IFRS 15. Okay, I will explain you the interesting lessons which I learned, by the way, from a very, very learned fellow. He is also part of the IFRS committee, Dr. Jans Freiberg. He actually helped us in one of the assessments with our contracts for some aircraft purchase. He was a very knowledgeable person, and I was really incredibly impressed by the approach he took to establish whether it's a lease or a purchase. Yeah, because it can have a significant implication on how you report your capex in the published financial statements, how you present these cash outflows in the cash statement of the cash flow. Because if it's a purchase, then the financing will be considered as a financing activity, right? And usually for the leasing, most of the companies take the approach to show these impacts under the investing activities. So these type of classifications can have quite a significant impact on the balance sheet and on the statement of cash flows. So basically, although the standard does not give too much guidance on how to differentiate between these two, but basis for conclusion does require us to assess, because the treatment for the balance sheet is very, very different. Because if it's an item of property, plant and equipment, then this has to be accounted for under IAS 16. And if it's a right of use asset, then under IFRS 16, right? Although 16 is somehow similar, but the presentation is a bit different. Okay. Sometimes there can be contracts where, as I just mentioned, like for example, we as transportation company can negotiate a contract, let's suppose with Boeing, yeah, and we will tell them, okay, we need aircraft to be delivered, but at the same time we want this to be financed. So we will involve a financing company as well, which will provide the finances, right? So it's a triangular then relationship, tri-party relationship, right? Again, there is nothing which in IFRS 16 which somehow limits us from the application of leasing guidelines. So these contracts still fall under the umbrella of IFRS 16 if these are established to be leases, right? Again, I would say if these are established to be as leases. And sometimes it can also get complex. For example, because of regulatory reasons, you may have to create a structured entity to host the asset, right? You can have a trust finance structure, which means a financing company, your manufacturer, lessee, then a bank who is acting as a trust and will hold the asset. So the title is not with the lessor. The title is now with trust. Again, accounting is driven by substance, not by the legal form. So these type of shell companies have no meaning, right? So accountants have to assess the whole deal from economic substance perspective, right? It's the work of the lawyer to making sure that your asset is properly secured and trust will not do anything bad. And we have the right to, to the use of that particular asset. But these type of complications are very, very common, especially in the aviation industry. Yeah, because to have the landing rights, you need to put the aircraft in the country where you want to register it. For example, if I want to fly from the US, I cannot register my aircraft in the UK, right? And if my financing company is sitting in the UK, I want to register the aircraft in the US, then I need to find a bank who will act as a trustee for me, right? So they will simply take the payment from me and will pass it on to the lessor or the financer who is sitting in the UK, right? But it does not mean that this whole arrangement will not be considered as a lease, right? It's only the thing that people are sitting in different territories or in different jurisdictions, and there are more parties involved to the deal, right? Okay, Here we will see what is the difference between control over the right or control over the asset, right? And the thing which is important here is more a legal assessment actually, whether you really to use that asset. For example, if the aircraft is owned by me, can I decide I just want to dismantle the aircraft? I want to send it to the junkyard, right? There is no concept of economic advantageousness here, yeah? So it's just the legal right to the asset, legal right to the asset. Can I pledge that aircraft for some other financing, right? So these type of things, for example, like sometimes you could hear hell or high water leases, yeah? For example, these are the leases where, for example, if you have a ship and that is damaged or it gets sunk, but you still have to honor the lease contract. Although the underlying asset is not there, but then this whole thing will become a financing arrangement. The asset is gone, right? You will not have anything on the right of use asset side, but you will still have the liability. The liability then will become from right of use liability to the financing liability, right? Or other liability, whatever. This is what happens in triple net leases or hell or high water leases. Yeah. So whatever happens to your asset, you are obliged to honor your legal commitments, right? So these type of assessments will tell you that whether you own the asset or you only have the right to use that asset. I think it just gives you a bit of flavor that what type of topics you can deal with under IFRS 16, right? Okay, as I just said, yeah, sometimes you could have structured entities. For example, in the aviation industry, I'm extremely sorry that I'm talking too much about aviation because that is my area of expertise, but still it's a little bit interesting topic. So I really want to share that most of the airlines, they try to lease the aircrafts in Japan. And those arrangements are called JOLCO, Japanese operating lease with call options. Why? Because in Japan, the investors who are providing the funds, they can claim the tax depreciation of the aircraft. So they can get a bit of rebate in their taxable income and the tax burden gets a little bit favorable. And then that benefit is passed on to the airlines. So that's why JOLCO is a very, very favorite way of financing the aircraft in Japan. Complication here is that for a JOLCO, you need to create a Japanese company in Japan, which is owned by the Japanese investors. Okay. Sometimes the auditors can get overexcited and they will tell you, oh, put this on the balance sheet. It's your subsidiary. Okay, it's my subsidiary. Yeah, but well, IFRS 3 defines the business, a combination of input, combination of your processes, combination of your assets. There are no inputs, there are no processes, it's only an asset, right? So it's not a business combination, it's just an asset deal. Although I have created a structured entity, but I should not worry about IFRS 10, right? It's not a consolidation topic because under IFRS 3, you can perform a concentration test and you can simply show them, look, although it's a separate entity, but 100% of the asset, the value of the company is concentrated in one asset. So it's not a business. You all agree, right? So these are the things which we have to watch out as accountants when we are dealing with IFRS 16 topics. Other thing is determination of the lease term. Okay, so insignificant penalty is a critical concept when you have to establish if any option or any termination possibility which is available to the lessor or to the lessee is somehow, I would say, relevant in assessing your lease term, right? So the concept here which you need to keep in mind is that is this penalty insignificant? What is your view on penalty? How would you see penalty? What is penalty? At least say something. Something which is mentioned in the contract. Yeah, for example, it may say, yeah, I have to pay 3 months of rental if I wish to terminate the contract at will. You agree, or you people do not agree? The people who agree, please raise your hands. And who do not agree? I'm sorry. Okay. See, this is how IASB has dealt with the penalty. They say penalty is not defined separately in IFRS 16 or in any other reporting standard. Okay. If the term is not defined in the accounting standard, then you refer to the English dictionary definition of penalty. So penalty can be through contract, but it can also be something, a situation where you have to suffer a disadvantage. And I will give you now the example. Just this contract of a building where you put in lots of leasehold improvements, and you have a contract of 5 years. So if you want to exit the building after 5 years, removing all these leasehold improvements and doing the same work into the new premises, this is the economic penalty which the lessee will suffer with terminating the contract. And this is what IASB really meant by the word penalty. You see, in some of the clauses, they have said penalty payments. When they say penalty payments, these are the defined things in your contract. When they have used the word penalty, then this is the economic concept. To assess the lease term, you have to refer this as an economic concept and not a legal concept. Sorry, I didn't agree. Yeah. Okay, so this concludes at least the session on IFRS 16. I think I have to rush into the next one because ESG is also going to take a bit of time. You all agree? So far it's okay? Yeah, please. We will deal with the questions maybe later on. But first, I really want to cover all the content here because I really don't want to miss any slide, right? Okay, ESG. What is this whole funda about? Why it is so important? I know, like, for example, I was attending one presentation on scenario management, and there were two concepts which really appealed me so much. First thing was that, future is always a windscreen view. It's not a back view mirror reflection. Yeah. So you cannot establish what's going to happen in the future by looking in the back view mirror, right? For example, when the television was invented in 1946, one of the media companies, they said, yeah, people will get sick of it and this whole thing will fail in 6 months' time. 1946, and now we are in 2022. Till we use TV, right? But at the same time, don't get overexcited. When US and Russia, they were planning to send someone on the moon in 1959, the US Postmaster General, he made a very friendly comment. He said, okay, before the man lands on the moon, we will have the guided rockets and we will deliver the mails to Australia in a couple of hours' time. Still not happening, right? So we also should not exaggerate the situation, and we also should not ever underestimate the situation, right? So ESG, I think I will not eat my hat if I say that it will be like an important topic. How important in Pakistan in the coming 5 years, I cannot say, but in Europe, it's already really picking up the momentum. Yeah, I heard of the carbon accounting term, I think 10 years back, right? When I moved to Germany, I think I moved there in 2009. And just after 2 or 3 years, I heard about this emissions trading system and then carbon accounting. I thought, what the hell, carbon accounting? Why you need accounting for carbon? And you see, in this last decade, this whole thing has become so important. Now, if you see the financial reports of the company, the annual, I will not say financial reports, annual reports of the company, financial part is getting thinner and thinner, and the social governance, environment, management commentary is getting that thick. When we started accountancy, I know financials were that much, and we used to have 2 pages of director's report, 1.5 page of auditor's report, couple of fancy photos from the board of directors, and that's it, right? Now the whole thing is corporate governance. What is our view to society? How we are dealing with the environmental issues? All these things are getting more and more important. Yeah. So just to give you a bit of feel, I think 20 years back, no one would have ever thought that 1 cup of coffee will have a carbon footprint of 140 liters, right, of water. And this is what driving the whole thing in a crazily rapid way. The whole thing is transforming into, a big area for accountants, and that is going to happen in a very fast pace. It's going to happen in a very fast pace. So what do we mean by ESG? So E part is environment, climate change. S is social, and G is governance, right? Governance, I think most of us are pretty comfortable, right? Most of us, we know that what corporate governance means. We know what is the compliance risk. We know the internal audits, all these things, right? But S and E is now getting also the same level of footage as we used to give to G in the past, right? So that is something which is driving now our sustainability roadmap for any organization which wants to do the business in a multinational or a multicultural or or in a diverse way, I would say, or in a sustainable way, right? So 3 main frameworks which are defining the criteria how we will deal with the environmental issues. I will start with the environmental issues first, okay? First thing is the Paris Agreement. Have you people heard about that? Good, excellent. So Paris Agreement was the landmark where it was said that the nations, 195 countries, by the way, signed this agreement in 2015 or 16, I think 16. And they all have agreed, for thousands of years, yeah, many things might have changed, but the carbon levels have remained always the same for thousands of years. But in the last 100, 150 years, now after the industrial revolution, the temperatures are rising. And that creates the whole trouble of climate change, right? The greenhouse effect in simple terminology is that all the greenhouse gases, which are your carbon dioxide, methane, and all these, they are just getting trapped around our Earth, and they absorb the heat, and which makes the Earth more warm, right? The thing is that if we emit 100, our atmosphere is still capable to absorb 55% of the emissions. 45% are getting trapped in the air, unfortunately. And this is something which now the nations are trying to work together to reduce this percentage, right? And the idea is to somehow curtail the temperatures in the range of 2 to 1.5 degrees, right? The rise should not exceed 2 degrees, otherwise it can be a catastrophe for us, right? The other important platform here is EU taxonomy, not much relevant for us, but it can act as a guiding principle how Asian countries will develop or could develop their frameworks. Okay, so EU taxonomy was somehow issued last year and will be applicable or is already applicable now from this year. The thing is, in this taxonomy, they have identified 6 goals, climate goals. Okay, so for example, climate mitigation, climate adaptation, circular economy, and 3 more. Okay, and the companies are obliged to map their operating activities and their capital activities under these 6 different objectives. So if I want to do something sustainable, then I should be able to map my activity under one of these objectives. Okay, and the trick here is that I should not do the harm to other 5 objectives. Quick example, Tesla, they are contributing by somehow reducing the carbon emissions by the introduction of battery operated vehicles, right? But if Tesla also accepts the Bitcoin, then they are trading in the activity which requires lots of energy. Yeah, so they are somehow damaging the other objectives. So they cannot qualify if they keep on accepting the digital currencies. They will not be able to qualify for the sustainable activities under the EU law. Yeah, this is how the whole thing evolves. Huh? Third important guideline is the GHG protocol. This is a scientific document, greenhouse gas emissions protocol. It tells us that what are the gases which are considered greenhouse gases and how these should be measured, how the consumption factors and the emission factors should be established. Okay, and that whole objective is just to have, you know, harmonization and standardization across the industries. Okay, it's more like a scientific document, but these are the three things which somehow establish our framework for the E part. Yeah, so far you people are with me, right? Too dry, right? Too dry. Yeah, unfortunately, just from IFRS 16 jumping into completely different world, right? Yeah. Okay, thank you so much. Okay, so like definitely sustainability risks, right? So these are the risks which could really threaten the business in a very, very severe way, right? For example, your environmental risks, your social risks, your governance risks. Environmental risks are linked with your climate change, and everyone is exposed to that, right? For example, the severe weather conditions like fires and floods and all these things, every human being can get affected, right? So these are the risks. Social risks, for example, the damage to your brand name because of, yeah, for example, animal rights, human rights, you know, all these things. Then governance risk, for example, like if you're not somehow complying to the laws or the different guidelines which are issued by OECD, for example, anti-bribery and sanctions. For example, if you do not comply with the US sanctions, it can be a big trouble, right? For example, even if I'm sitting in Pakistan, I'm transacting in my PKR credit card. If that is a Visa card, I need to make sure that I don't deal with someone who is sitting in North Korea, right? Because as per the US law, every transaction which you do for US based company gets cleared on the soil of the US because it has the mechanism of clearance of US dollar in the back end, right? And that is, as per the US law, is assumed to be cleared on the soil of the US. And if you have a US sanction, then it is always at par with the GBP. So you will have the similar level of sanctions for the GBP too, right? European Union, they have their own criteria. Okay, just to give you a bit of feel that what are the opportunities which are available under the ESG platform. Yeah, we just saw that we have three pillars, E, S, and G, right? The thing is, there is always a question, yeah, is it better to be a profitable company or be a sustainable one? You cannot have one without the other right now. That's the key thing. So the thing is that if there is a transition from conventional business models to the sustainable business models, why the investors should invest in the money which has less sustainability, right? For example, finding a new investor to finance a new oil rig will be a bit difficult or can be a bit challenging or could be a bit expensive. Let me put it in this way, right? However, if you will put up a project that I want to build renewable energy wind farms, you know, like windmills, you will find thousands of investors, right? People will be very willing to invest. And that defines the rate which are somehow attached to the ESG stocks. They have much higher rates as compared to the conventional stocks. How big is the investing market? Just in 1 year time, it grew from 51 billion to 120 billion globally. So there's a massive potential here. And if it will continue with this pace, then we should expect 1/3 of the projected growth will be ESG backed investments. And the debt market will also be quite massive, right? So ESG stocks, ESG debts, or ESG bonds, these type of products will have certainly much, much larger share in future, right? So investors are really looking for the sustainability roadmap. They really want to see that if you are putting up a proposal, how sustainable this proposal is. It's not only now making money, it's also about making sure that it will be sustainable for the next decades, right? So these were the 6 objectives which were somehow mentioned in the EU taxonomy. So as I just said, so if you are meeting one objective, you need to ensure that other 5 are not harmed, right? Circular economy, I can give you a very, very simple example. Like Coca-Cola or Pepsi, they are recycling, they do recycle their plastic bottles. This is the circular economy, right? So you recycle, you reuse, you somehow refill, whatever. Yeah. Mitigation is something, where you try to put in some measures to mitigate the emissions, for example, like switching to electronic vehicles, right? Adaptation is, for example, to limit the fires. You can put more goats there to eat the bush. That is adaptation, right? Or like, for example, planting more trees to avoid the flooding, for example. And like other are more about how to conserve the water and marine resources. Circular economy is very, very important. And biodiversity, ecosystem, more like scientific concepts. But this is how, for example, if I want to put in my capital expenditure plan, EU taxonomy will require me that if this is a sustainable activity, if yes, then I need to mark that what particular objective it will satisfy. For example, in Deutsche Post DHL, we have implemented a carbon neutral buildings. Now, so for example, we will say that we will try to buy the energy from green sources. So which means we can offset our emissions, right? So although we will have the emissions, but the energy which we will buy will be from the green sources. So like windmill, for example, although you will still have the heating, which will have a bit of, emission, carbon emission, but it will offset due to the purchase of electricity from the green sources, right? Other classic example here, which I would like to quote, is the sustainable aviation fuel. Have you people heard about sustainable aviation fuel? Okay. This is actually new product which just came into the market, I think last year. And they are using different wastes and bio products to produce a replica of diesel, which is used in the aviation sector. Although the trick here is that this is 3 to 4 times expensive than the conventional one. Although it will achieve the same result, but you have to pay the price, which is higher 3 or 4 times. And at the moment, there's only one big supplier, which is based in Singapore. And but at least what then you can do is that the emissions which you're gonna produce by the usage of that diesel or oil or whatever will be offset, because this fuel is made of waste and the bio products, right? So at least that will offset my emissions, and it will then certainly fall under the climate change mitigation objective. Question for accountants will be how you will account for the premium which you pay on the sustainable aviation fuel. For example, I'll give you a quick example. Last year, we bought quite a massive amount of sustainable aviation fuel. The thing was that our objective was to somehow offset our emissions, right? That was our objective. It was not efficiency driven decision. It was not something, which we wanted to try differently. It was purely to get the credit in our carbon emission reporting, right? We do not have the storage. It was sufficient for one year, but we do not have the storage facility, right? So what was the agreement there was that we bought the fuel, but it was dumped into the fuel capacity of British Petroleum. So it was somehow circulated into the aviation network, but it was then blended with the normal fuel. And we were also not sure if our aircrafts will use that fuel or someone else will use that fuel. You see the point here. We paid the premium. We bought a massive amount of sustainable aviation fuel at year end. The premium was around, let's suppose, 15 million euros. Okay. This stock could have lasted for 1 year, but we do not have the storage facility. We said, okay, we will execute a contract with BP that they will purchase this fuel from us on a normal price, and they will dump it into their normal distribution facility. And then British Airways or FedEx or whatever, the carrier would be, can use that fuel. So how shall we treat that particular premium in our balance sheet? Is it an asset? Yes, that is absolutely the right approach, because in the emission trading system, usually you book and claim. Yeah, so because we have claimed this in the non-financial report, and that was the reason we also have to expense this in the P&L too, because there was no underlying asset, right? Although at the moment there is no linkage between the emissions trading system and the financial accounting. In the financial accounting, I need to follow the definition of an asset in the conceptual framework, right? And there was no economic resource which was under my control, although I paid the price, but it was not something which I can control in the future, right? So it had to somehow expense. Sorry?
Achieve the low cost carbon footprint credits.
Yeah, carbon footprint reporting was still a non-financial reporting, right? The question came from the accounting perspective that this fuel was purchased for the consumption in the next 12 years. But I didn't have the guarantee that I will use the same fuel. So that's why I said, okay, whatever premium was paid will be expensed.
And actually, you actually contributed in the emission reduction, and you could actually get those credits.
Yeah.
Because you are
Absolutely. Yeah. Thank you very much. Okay, so there are, unfortunately, the slides are not up. Something is getting cut at the bottom. Okay. Can we set the resize or something? Because unfortunately, it's the last. Okay, no worries. I think we can manage. Okay, so when it comes to the non-financial reporting of emissions, there are 3 different scopes: scope 1, scope 2, scope 3. European Union, they have started with scope 1. That is the most easy one to manage, because you know, like how much fuel you are purchasing every year. And then you can apply the consumption factor, and then you can apply the emission factor to arrive on the carbon emissions, right? This approach is called tank to wheel. Yeah, so from the tank to wheel on your wheels, for example, wheel means from the fuel tank to your wheels, right? The thing here is that it can be a challenge. It can be a challenge for the multinational companies, because, for example, if I see the case of DHL, we have more than 1,000 subsidiaries across the globe. Yeah, and collecting the data of fuel consumption across the globe can be a real challenge. Just to give you a bit of flavor, just on aviation, last year we consumed approximately 4.5 billion liters of fuel just for the aviation network. And if I also add on the fuel which we use for our ground transportation, it's a massive number. And collecting that data can be a bit of a challenge. Second thing is scope 2, which is basically your emissions from the heating and cooling of your buildings. For example, the purchased electricity. It is also a big challenge because I cannot go to WAPTA and tell them what is their consumption factor, what is their emissions factor, right? Although in Europe, they do tell us, the energy provider obliged to tell that what are the emission factors, but in Pakistan or many Asian countries, this data is still not available, right? So that's why they have started well to wheel emissions, right? Then the other aspect will be like, for example, if I'm buying a purchase transportation, for example, if I buy a ticket from Emirates, will they be able to tell me how much carbon footprint that ticket has? You see, these type of things will come under your scope 3. Ultimate goal of Europe is to go to scope 3 as well. So it will be a big challenge. It will be certainly a big challenge. This area, that's why requires lots of technical support from your engineering staff, from the facility staff, from your purchasing staff. For example, like purchasers have to negotiate with your subcontractors. Will they be able to give us this data? Right? It's a massive amount of work. It's a massive amount of work. Yeah, your lawmakers, they can simply put this on paper, but the consequences for the business are enormous, really enormous. Even for scope 1, it took us a couple of years, like 5-6 years to build up the platform, right? It's not collecting your receivables data or your cash and bank data. It's a non-financial data. You see, like where you have millions and millions of liters consumed every year, then tracking record of all those liters which we have consumed, and then computing the emission factor, then the consumption factor. It's a massive amount of work. At the moment in DHL, we are using the same financial platform to capture all this data. So what we did, we extended the chart of accounts, right, to the non-financial data as well. So which means now our operational staff in the countries, they try to work together with the financial staff, and then they provide the data, and the finance teams, they then input the data into the reporting system, like liters. And then we have in the back end the calculations defined for each type of fuel, that if we have bought diesel, this will be the consumption factor, this will be the emission factor, right? So they take those multipliers and they arrive on the theoretical carbon emissions. Yeah, you don't have to be 100% accurate. It's all an approximation, but still it needs a massive amount of infrastructure. E part is the most critical one and the most difficult one. Yeah, you see how the things can change for the accountants. Okay, S part is easy. G part is also not so difficult to manage when it comes to account reporting, but still for our HR teams, even managing S is also quite difficult, right? Our marketing teams, our country managers, they all have to work on S. For example, what are we doing for our employees' well-being? What is the sickness rate? How many accidents we have in that month? Do we have some Go programs? For example, do we help the community when it's needed? These are the things which will be monitored under S. Yeah, so companies will have to define that what are their goals under S. For example, do they have employee opinion survey? What is the employee retention rate? How many women we have in the leadership roles? Do we respect different cultures? Do we respect different nationalities? What is our hiring policies? All these things are covered under S. Also, what we have done, we are trying to capture, for example, the sickness rates. Then we also try to capture the results from our EOS surveys, employee opinion surveys. Then also all the certifications, we also try to report in the chart of accounts. For example, if we have some external certifications, for example, if we have won some award like top employer award or, these kind of things. So all these things are then forming part of your KPIs under S. Yeah. So S part is more like social. How the people who work for you or the people who are dealing the business with you think about the brand image, about the company. For example, will I be comfortable to work for a tobacco company? Right? These are the things which PTC might have to manage under S. Governance is always close to the heart of finance people, right? I will not say too much about G. You people have better knowledge than me on the G part, like it's all the conventional things. I know, yeah, we were always hearing about the transformation of a CFO role from a normal finance manager to a business leader, but we are again going back to the basics, keeping the house in order, right? That was the transactional accounting. Your bank recs are properly matching, your cash accounts are properly managed, you have the right controls on your receivables, you have the right controls on your payables, all these things. We are going back to the basics. Other important aspect here is, compliance to different policies. Right? For example, as a brand image, I have to be very careful about the people or the contractors who are working for me. Yeah, for example, are they making sure that they do not involve any kind of child labor, for instance? Do they comply with anti-bribery? Do they comply with the sanctions? I may be complying, but I also need to ensure if my subcontractors are also compliant. And for this, what we have done in our payable system, we have defined a flag that if we have obtained the signed code of conduct or not. All this is complex, unfortunately. All this is complex. But the problem is, this is how the investors will see the sustainable business. Just imagine, yeah, you may be a very profitable company. What happened to Arthur Andersen? Just in one night, the firm was gone. Just one bad repetition and they never existed, right? And this is the same thing for any business, right? If you have a bad name, your right to play will be lost. Agreed? Yes, no, maybe? Okay. You don't have to agree. You may have different opinion, but yeah, absolutely.
If we will agree, you say, I don't agree.
Sorry?
If we say agree, you say, I don't agree.
Yeah. Thank you. Okay, so as I just said, yeah, I wouldn't be eating my head if I say that this is growing on a very, very fast pace. Yeah. It's not something which is hanging in a limbo. It is moving very, very fast. It is moving very, very fast. It's getting a hyper transparency in your data. For example, as I just said, 20 years ago, no one would know that a coffee cup will have a carbon footprint of 140 liters. Now, when people are making a choice, at least in Western community, they try to see that, which is more sustainable product. For example, I will tell you a very, very interesting example. Yeah, when we go to our cafeteria during the lunchtime, every meal has the carbon footprint. You want to eat a green meal, or you want to eat a steak or whatever, it will have much higher carbon footprint. If you want to go to some vegetable meal, it will have a much lower carbon footprint. So these are the type of choices which people are trying to make. Yeah. Oh my goodness, look at oh my goodness. Like stakeholder activism. I will tell you a very simple example. Screen time for children. Apple was forced to do something by the investors. They really wanted them to put some measures that how the screen time for children can be somehow managed. Yeah, so these type of expectations the society has from the companies now. Yeah. Then investor emphasis, we just saw in the previous slides, how big is the investing market for the ESG related stocks, which means that I can move to the next slide. Okay. Now, good news for the accountants. We will again be on the forefront. IASB, yeah, they acted very, very responsibly. After the COP26, they announced the creation of the new Sustainability Standard Board. They already named the new person, and they already had the work groups who were defining like what kind of requirements a standard would have for the sustainability reporting. Now you people have got the flavor that what can come in the sustainability standard, right? And now they want to standardize and harmonize these expectations into a document, right? They already had a couple of work groups. They have been working on this issue for last many years, couple of years, not many, but couple of years. And the stage is set. And now we are expecting the first standard to be out quite soon, I think in 2022, first half of 2022. Okay, so yep. So basically what they're going to do, they will have two parts, thematic part and the industry specific part. Thematic part will be applicable for everyone. It will define the baseline criteria, fundamentals, which need to be considered for every organization, E, S, and G. And then they will have some industry specific guidelines, which will be applicable for certain specific industries, for example, transportation, energy sectors, and all these things. Yeah, energy sector is, by the way, the biggest contributor to the carbon emissions. Yeah, second is transportation, energy is the biggest. And role of accountants, yeah, we always have. So that's why this area will fall under the domain of the accountants. We will deal with the operational staff, we will deal with the businesses, and we will make sure that we apply the same level of diligence which we give to the financial data, right? This is the promise which accountants have to make in capturing the non-financial data here as well. I think like this has been already tested, right? For example, Oscars. Accountants are counting the ballots for many, many years, apart from 2017 blunder, which happened. That's why accountants have to maintain a low profile. They can catch evil eye very, very quickly. So that's what I think happened in 2017. But yeah, accountants will be on the forefront. Yeah. And other opportunity, I think one thing I should mention here, don't see this as a tedious exercise. It has lots of potential, by the way. It has lots of potential. For example, I can tell you, when this whole thing became more visible, we introduced a fuel optimization program in our aviation network. Yeah, and that has already achieved a significant amount of fuel saving. What happened there was that we formed a work group where finance, aviation management, and IT people, they all sat together and we looked on different aspects. Yeah, what are the things where we could scientifically reduce our fuel consumption? One aspect was that how we load the aircrafts by balancing the heavy and light ULDs, you know, the load devices. You can somehow optimize the take-up fuel consumption, and that also delivered a bit of fuel saving for us. Then, for example, flying on the less critical routes on a bit lower speed was also achieving a certain fuel saving. Then during the taxi, switching off one engine was also like a fuel saving. So all these initiatives were only developed after the introduction of the ESG, because once you start measuring something, it gets controlled. If it becomes visible, it gets controlled, right? Okay, with this, I think I still have 20 minutes. So we will now move on to the last part. So far, you people are with me, right? Did you people get a bit of flavor on ESG? Yes, no, maybe, maybe? Oh my God, okay. I have tried to make it a bit simple. Yeah, that's why it was just the concepts, right? Just a concept, just to give you a bit of flavor that what you should expect under ESG. There's a lots of talk about ESG, but practically you may not find lots of guidance, yeah, what exactly it means for a company. Because I'm dealing it from the business perspective, so that's why I'm sharing the experiences, that what exactly it means for a running company, ESG, right? It really looks fancy, yeah, it looks fantastic, but what it means for the businesses in a practical term, this is what you should expect, right? Okay, now my favorite topics. just to give you a bit of flavor, I will not spend too much time here. Just the idea is just to tell you what is on the horizon of IASB for the future years, right? What you people should expect. Yeah, what's going to change? Or what is the way of thinking the accountants have in this body, right, at the moment? They asked for the request for information and request for comments for their 5 years plan. And yeah, there were a few topics which somehow, first thing what we should see here is that they revised the definition of materiality. It was always, exclusion or inclusion of certain information, right? It was always inclusion or exclusion. Now they have also added the word obscuring. Yeah, which means although you may disclose the full information, but you try to split it here and there. So make it less visible, make it less prominent. For example, the salaries of the directors. You can say the car benefits under transportation, salaries under salaries, and these type of things, obscuring, right? Related party transactions, trying to split the related party transactions into different buckets. This is obscuring. Yeah, so the reader of the financial statement should get a clear view that how many or how much transactions you have with the related party. So it's better to have this in one place, yeah, to assess the exposure, right? So this is a new characteristic which has been added to the definition, obscuring. Yeah. Second thing is objective-based disclosures. I'm not sure if you people have heard about this project or not. Okay, so they have already issued the exposure draft, and they want to test this approach on 2 accounting standards, IFRS 13, fair values, and IAS 19. But the thing is, if this gets tested and somehow is vetted by the finance community or by the business community, then they will follow this for all the new standards. At the moment, you have the concept of boilerplate disclosures, right? You have a big checklist. Tick, 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 tick. Every year, tick, 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 tick. Yeah, this is what happens, right? And the problem is, does it really have any benefit? This is something which IASB wants to somehow rethink. Every standard has a big part, like a part which defines what disclosures they need, right? They say, okay, but this is like a boilerplate, huh? Which you keep on recycling every year, right? So this is the work which maybe a semi-senior is performing every year, taking the tail list and making sure all the disclosure are there. And last part which we used to do during the audit exercise, making sure the schedule 4, schedule 5 disclosure are there, and that's it. Now they have said, okay, these are prescriptive disclosures, right? And they want to move now to the descriptive disclosures. So what they will say, they will define the disclosure objective. They will say, okay, minimum you should put this, and then try to explain the material transactions in that area or the material impacts of your defined benefit plans on your balance sheet and on your cash flows. And then management has to put a narrative that how do they feel, for example, At the moment, there was no requirement to disclose that if you have a big deficit on your defined benefit plan, how you're going to fund that deficit, right? And this is what they're going to put now, that what is your plan, how you're going to deal with this deficit, what will be the impact of this deficit on the cash flows of the company. Yeah, so they will define now the disclosure objectives of different areas, and then the management will require to give the descriptive commentary or the descriptive comments to satisfy that objective. So it will no more be the tick, tick, tick list. Yeah, this is what is going to change. They already had issued the exposure draft. I was able to participate in one work group, which was also hosted by the IASB staff. And there was lots of criticism, and they say it will need lots of judgment from the management. Work from the auditor will also enhance, definitely. Then you will have to somehow assess each and every disclosure if it is meeting the objective or not. And you have to refine the wording and all these things. So it will not be something simple. This is for sure. But the comment from the IASB lady was brilliant. She said, but under the conceptual framework, you're already required to do that. You should already disclose all the material facts and figures which are published in your financial statements, irrespective of the fact whether these are listed in your disclosure requirements or not. Under the conceptual framework, you are already required to disclose all the material financial information. So they are just trying to make it more structured. Yeah. Okay. Yeah, just. Then balance sheets. Have you people heard the $1 trillion club? 6 companies, 6 American companies have now the market capitalization of more than 1 trillion. Apple being, I think, ahead of all others. It took them a while to reach to the $1 trillion mark. Then I think 18 months from 1 trillion to 2 trillion. Then just few months from 2 to 3 trillion. Is it realistic? This is a big question for the accountants. Their net worth on the balance sheet is $132 billion. Market capitalization of 3 trillion. Gap, massive. So IASB is now trying to think that how they can narrow that gap and define some kind of guidance. It will be a long-term project. Long-term project, because it's not going to be an easy fix, right? We know that's not going to be an easy fix. So they say, like, if this is such a big gap, is it the brand value? Why the investors will be willing to pay 3 trillion for a company which has a balance sheet of 132 billion, right? Second thing is, if our accounting rules on IAS 38 are too conservative, at the moment, the criteria to be on the balance sheet as intangible asset is highly conservative. I must say highly conservative. Yeah, there are many things which one could argue that should be on the balance sheet. For example, yeah, the same, if you see the same economic substance, if someone will buy Apple now, they will try to capitalize many things. For example, like under the US GAAP, they will capitalize some of their, customer lists, these kind of things, right? So why this cannot be done for the company which is already running? This is a big question because you try to value all the assets at fair value, and then whatever is the gap goes into your goodwill, right? They want to minimize the number which goes into the goodwill, right? So they're thinking why this cannot be done for the running companies too. A very long-term spectrum. Don't expect anything in the next 2-3 years, but this is something which is somehow cooking in the ISB brains, huh? Yeah, if we say the accounting is the language of the business, then it has to have some substance, right? Asset bubbles linked to the previous slide. The problem is, if you do not have the quality in the balance sheet, then you can have the scenario of asset bubble. I think the most classic example, which I really liked, was the Dutch tulip bubble in 1636, 1637, where just a flower was traded as in the market at 50,000 a bulb, right? It was a massive price because it became a luxury item. The rich people were carrying those flowers with a pride. It was not something which was existent at that time in Netherlands. So they somehow brought this from some other continent or whatever. And suddenly this became a mania, and they say, okay, every rich person, he used to carry bubbles, tulips, you know. And that effectively boosted the price. And at the peak, one flower was traded at that time, although it was not dollars, but equivalent of $50,000, gold coins, equivalent of $50,000, right? So whenever you have an asset bubble, you have 5 different stages. Yeah, first, you get excited with some innovation. For example, in the case of Apple with iPhone. Yeah, then there will be a price boom. Apple can charge any price they like, right, at the moment. Quite expensive, right? They are really, really expensive. Then euphoria, people try to invest more and more. When the price reaches to a level where investors think it will not go further beyond, they try to offload their investments, and then the panic starts and the bubble will crash, right? This is something which IASB has in mind. If you have a big gap between your balance sheet and the market capitalization, then the scenario of asset bubble could exist. Yeah. Yes, so it's a challenge for IASB. Don't expect something on a short-term spectrum or a medium-term spectrum. It will be like a long-term project. It will take a couple of years for them to come up with some ideas and, you know. Then digital currency, for example, linked to the asset bubble. At the moment, no one knows what is the real worth of a Bitcoin, right? It's going up, down, yeah, what exactly that is. So apart from that, how do you actually account for the token? Is it cash? How will you put this on your balance sheet? Cash? What kind of investment, sir? But the problem is cash and cash equivalents are defined, which are highly liquid investments and do not have any insignificant risk of changes in value. This thing is going up and down every day. So this cannot be classified as cash, right? Financial asset. Let's see. It gives the bearer the right to receive the cash or cash equivalent. Digital, if you own a Bitcoin, you cannot go to any bank and say, yeah, I need really the cash. It may have a certain platform where people may be willing to trade in cash, but there is no guarantee, right? For example, if you have, on the other hand, an accounts receivable note, you have a legal right to receive the cash, right? So it's also not cash, not a financial asset. Then intangibles, IAS 38. And that's the problem. At the moment, IAS 38 is just a very narrow accounting standard and deals with the most complex things, right? Goodwill impairment, your intangibles, and all these things. And IAS 38 gives you the possibility of valuation on cost or the fair value model if there is an active market. If it's at cost, then what will you do? You will do the impairment testing, right? If it's a fair value, then you do not need an impairment testing, but then you will need a market quote, right? The problem here is that most of the business community, they argue that although it does not give you a right to receive the cash, but it has the characteristics which are more closer to the cash and cash equivalents or to the financial assets. So the guidelines which are laid down in IAS 38 are not too much relevant for the digital currencies. So these type of challenges which IASB is at the moment facing. So you people should expect quite a number of revisions to IAS 38. Maybe they will put some separate further guidelines on the digital currency. For example, US GAAP is even more conservative actually. US GAAP does not allow the fair value valuation of the intangibles, right? But Tesla, like Elon Musk, he made more than 2 billion, which means he must have sold the Bitcoins, because if he was just holding the Bitcoins, there is no guideline in US GAAP which allows the fair value model for the intangibles, right? So if he has realized a profit, he must have sold the Bitcoins. Yeah. And these are tested for impairment annually if valued at cost. So these are the practical challenges which we face when we try to somehow match the more advanced technologies or more advanced products with the current accounting guidelines. Yeah. So at the moment, the only guideline which governs the accounting for digital currency is IAS 38, which is also applicable for goodwill. You see such a big contrast, such a big contrast. Zombie companies. I think this is my last slide. I will be perfectly on time. Ever heard of zombie companies? These are the companies which, although are still surviving, but are backed by certain financing, big financing, and their earning levels are still not reached to the level where they can service their debt. They're only able to service the interest part, but not the debt. Most of the time, these are state-owned companies. You know, for example, PIA or some other organization like steel mill or, yeah. The thing is, this term was somehow originated in Japan when there was a big company and it collapsed. And their finance minister said, yeah, a company with almost 100,000 employees is too big to fail. So IASB also wants to put more disclosure emphasis on the zombie companies. So the investors should know that what are the projections, how the management believes that it will deal with the financing. Because at the moment, most of the disclosures are pertaining to your historical activity, right? For the zombie companies, maybe they will define more disclosures, which will also require the commentary on their future plans. That how are they aiming to get rid of the financing, right? Or how will they get the money to service the debts which they have accumulated in the balance sheet, right? With this, I think I am almost done with this particular slide. I hope that I was not that bad. What are Thank you so much. Thank you very much. So I'm on time, sir. Exactly at 8. Yeah. Suman sir, here I will need your help a little bit. Help करनी है आपको सुनने में problem होगा ना.
We can move on to the questions. Any questions from the audience? I have a question. What is the expectation of IASB from ESB perspective, from the auditor's point of view? What they expect from the auditor on ESG in the future? On ESG,
yes. I think you will get this on the first standard, which will be issued pretty soon. And the thing is that, as I said, why the accountants are on the forefront, because IASB expects the same level of diligence to this non-financial data, which has to be somehow similar to the diligence which we apply to the financial data. This is the expectation. right? So if you put something in the annual report and that needs a certification, then it has to be audited in the same way like how we audit the financial data.
Then,
And that will be audited based on the guidelines which will be laid down in the first IASB standard.
then we should expect another review report like Code of Corporate Governance review report as a
Yes.
part of the financial statements in the future.
Yes, absolutely. It
And
will be. It will be.
might be in couple of years. So it can be a revenue generating for the firms.
Yes.
And it can be a revenue expense for the organizations in the future.
Absolutely. It will require much more work from the auditors. At the moment, you have technical experts who verify, for example, like auditors, financial auditors, they cannot verify all the technicalities, right? They have to also rely on the expert opinion. Exactly how the same way how you do for the legal cases or these kind of things, right? So there are certain organizations which actually do the certification on an annual basis for your emissions data at the moment. Yeah. And we will then somehow use that as our auditor statement as well. Yeah.
So we might need in this review, as I understand, we might need the experts, just
Yes.
like the values we use in the getting the data correct.
Yes.
So we might need the expert in reviewing.
Yes,
these
yes,
carbon-related things.
absolutely. It's exactly like how IAS 19 results are reviewed by the actuary. We do not have that kind of expertise, right? It's not a work of the accountant, right?
And currently,
Yeah.
these things are managed through ISO standards as well.
Yes.
Every organization have to comply with
Yes.
ESG, ISOs
Yes.
to get the drawdowns or to
Yes,
get the
yes,
loans
yes,
and things
absolutely.
like that. To
Certification,
get
yes.
the approved.
Yeah.
So we are moving towards another set of standards from IASB, ISSB
Yes,
named.
yes.
So we have to comply more standards in the future as an organization. It's a lot more work to do. We might need a person in the accounting department who is qualified enough to comply with these standards in the future.
Many, not one.
Yeah.
We have quite an army, finance people. It's a good blend, actually. It's a exciting field for the young professionals, right? And you have a good somehow blend of people who have IT background and finance background, and they all form somehow the team for ESG reporting and ESG controlling.
It means it's another opportunity for all finance professionals and
yes.
accounting professionals
Yes,
for the job in the future.
Absolutely.
It's another job market which is going to develop in Pakistan as well.
Absolutely, it will certainly, at least from the multinational perspective. We structured the new department, lots of people were recruited, and the key thing is it will remain the responsibility of the CFO.
Yeah.
That is the key thing. It will fall under the responsibility of the CFO.
So it's keep on revolving. CFO role is keep on revolving over the time. And now, any question from the audience? So please, Mike, in the mic, please. Yeah, mic then, please.
चलें आप बता दीजिएगा. No problem.
Oh,
Yeah,
please.
Thank you so much. The first question would be regarding IFRS 16. We talked about penalty clause that is given in the IFRS 16. There are two types of penalties that could be there in terms of a conventional financial lease agreement. That could be the late payment penalty, and that could be the breach of contract.
Yes.
So what kind of penalty did you talk about that should be significant in order to have some implication on the contract of lease, or in terms of calculating the lease, that whether it is to be accounted for as per IFRS 16 or not?
Penalty from which person?
Penalty, what type of the penalties will be fall under the ambit of IFRS 16?
Yeah, this I just mentioned, right? So wherever the term refers penalty payment, it will be something like a contractual penalty, most likely. But wherever it's only mentioned penalty, it will be an economic concept, which is inclusive of your contractual penalties and also the disadvantages situation which you will have as a lessee, and which you could also have from a lesser perspective too. Now, for example, when you need to establish a lease term, then you need to follow the economic concept.
Okay.
Right? Yeah.
Thank you. The second question would be, you gave example of the aircraft industry, since you have worked in that industry. According to IAS 16, an aircraft should be recorded traditionally. If a company owns an aircraft, it should record the different parts of the aircraft, like the fuselage and the engines and the, the airframe or the avionics as separate set of assets or separate class of assets. How do we do the same if that same aircraft is leased? And all of the components are leased, and how that right of use would be classified in comparison to the lease liability? Let me explain.
The aircraft are leased separately. How we will classify these in the financial statements under IFRS 16? Each and every part is separate.
Yes.
Leased.
Mm-hmm.
Now, how we classify these under IFRS 16?
I didn't get your question actually. So
Okay,
if you have
me
negotiated a lease, for example, for let's suppose an aircraft, right? What do you lease? You lease an engine and you lease the frame, right? The thing is that everything has to be somehow depreciated. The right of use asset will be depreciated based on their useful pattern, right? So which means the engine, if it has a useful life of 2 years, it will be expensed over the period of 2 years.
Yeah, but that is not the question. The question was, you use the example.
No, it's okay.
अच्छा, आपने एक एग्जांपल दी जो कि इस पे थी, एयरक्राफ्ट पे थी. एयरक्राफ्ट अगर मैं कंपनी के तौर पे ओन करता हूं, तो I book the fuselage as a separate asset because it has a separate useful life. I book the engine as a separate asset because it has a different useful life, and then I go to the avionics and I book the same as a separate class of assets. When I lease that aircraft, for example, under this IAS 16, each one of that asset should be recognized separately as right of use.
Yes.
But when you explain that, you tend to, rather, I understood that you identified that when there is a service element in sort of the engine that you used,
Yes.
Is an example that you used. How you could relate these to the requirements of IAS 16?
Yeah, but
and
the example which I quoted, in the engine, in the part which was covering the engine, there was no identified asset, because I have a contract with, let's suppose, General Electric or Rolls-Royce. Yeah, they say that every time my aircraft will be mounted with an engine, but it can be any engine, right? The thing is, so they have a significant right to substitute the asset. For example, you go to Rolls-Royce and you say, okay, I want an engine which has a life of 6,000 cycles. And they will say from their record, this particular engine is mounted on aircraft which is operated by PIA. In this case, they can require us to return that engine, and they will mount another engine which will be maybe having a life of 2,000 cycles. So this whole contract, I cannot consider this as a lease, because Rolls-Royce has a practical ability to replace the engine, and they will also benefit from the replacement. They can sell the engine which was already mounted on the PIA plane, right?
so rest of the aircraft,
It will be then considered as a service contract.
only engine.
Only engines, yes.
Yeah, thank you so much. The last question would be, basically, when you talk about the economic bubbles,
Yes.
a couple of slides earlier, you refer to a sort of paradox that we usually deal whenever an economic bubble is considered, because the real value of the assets is usually, that is the breakup value that is depicted in the balance sheet.
Yes.
While the market sentiment, or you say the investor sentiment, is reflected by the intrinsic value, that is the market capitalization. That seems to be a paradox, because everybody is there to do business, and as an investor, the investor would want the highest of the returns, and as a company's management, the management would also want to have a very strong breakup value for each of their shares.
Yes.
So this is a sort of paradox, because all of these bubbles that you have mentioned, there was a total gap between the real economic benefits that the asset could have generated and the economic benefits that were allocated to those assets.
The problem was, in these cases, it was very difficult to establish the economic value of those products, right? And that was the risk which IASB also wants to somehow mitigate or minimize, I would say. I mean, accountants, we do not have control over the market capitalization, right? Market capitalization is driven by the behavior of the investors. Our job is to report the balance sheet, under the guidelines of IFRS, conceptual framework, and the guidance which is laid down in the standards, right? The only thing here is that IASB wants to see if there is any possibility to narrow down that gap by refining the rules or by refining the rules which are laid down, for example, in IAS 38. Yeah, for example, allowing the businesses to have more research and development costs on the balance sheet, right? Or maybe allowing them to have the internal brand also on the balance sheet through some third-party valuations or whatever. But these are still something which are on a longer term horizon. No one knows how the IASB is going to react on that.
Yeah, that is
Yeah.
very interesting because on the other side of when we talk about
Yes.
the role of CFO, we
Yeah.
study ball and Brown theory regarding the release of information to the market so that the asset prices, the share prices could effectively be managed in the market. So there's a lot of gap between what the IASB is trying to do with the
Yes.
financial reporting framework and the social reporting
Yes.
framework, while on the other side, what the CFOs are actually doing by managing the financial markets and the
They're part of the business, right? It's their
Yeah.
job, right? It's their job, right? But if you do not have certain guidelines, then definitely like everyone wants to maximize the shareholders' wealth, right? This is the main objective of the business, right? But the CFO is like a watchdog too. CFO is like a watchdog too. He has to ensure that we are compliant with the accounting guidelines, right? If there are no guidelines, if something which is defined by the market, then CFO, like, I mean, hardly what can he do, right?
Any other question, please?
I have
Give us yours.
Najam, I appreciate really and thank you for giving us some insight of certain new ideas and new things. And I have two questions and one comment, and you may answer, one by one. Regarding this digital money you talked about,
Yes, Bitcoin.
I would like to know how this digital currency is currently being recorded internationally, because I don't know whether it exists in any of the balance sheet in Pakistan. So have you any idea that how they are being recorded internationally or in the international market somewhere? But you said, it is being recorded or will be recorded as intangible asset. So related to this question, I have another question, that does this digital money fulfills the definition of intangible assets?
Yes.
That
Intangible.
covers that falls in that definition?
Yeah.
To record as intangible asset?
Yeah.
So it is being recorded as intangible asset?
Yes.
Okay.
Yeah, because the problem is that intangible asset is a very, very broad definition. So the thing which you cannot really physically touch or observe and also not covered in any other standard will ultimately fall under IAS 38.
Okay.
That is the kind of, you can say, a default rule, right? So if you have a certain guideline in any other standard, for example, IFRS 9 for the financial instruments or any other topic, and if this particular area is not covered in any other standard, then ultimately the only guideline which is available is then IAS 38, unfortunately. And that is a bit of limitation. That's why IASB wants to refine IAS 38.
Yeah, it might have been parked temporarily in that head.
Yeah. Sorry?
It has been parked in that head
Yeah.
of accounting.
Yes.
Maybe temporarily.
That's very true. That's very true.
Yeah.
Yeah.
Okay. Second question is costs incurred on environmental decisions. What do you expect? Are you expecting any special accounting treatment to record those costs which we incur or being incurred internationally in environmental decision taking, matters?
On the costs.
Yeah, how it will be reflected in financial statements?
For the cost of
Costs for ESG.
Oh, yeah. Of course. Again, the thing is that, we have to follow the guidelines which are laid down in the conceptual framework. That has clearly defined what is an asset, what is a cost, what is income, what is liability. So IASB is not intending to revise anything on the conceptual framework. So which means that, for example, if you have to put in new systems to capture ESG, then whether these meet the definition of, unfortunately, again, IS 38 will be something which the assessment management has to do.
So we are not expecting any special accounting.
No, I don't
treatment
think
on
so.
this
I don't
ESG.
think so. I don't think so. At the moment, at least I've not heard.
Yeah.
Thank you, Vismin sir.
And my last point is a very, it's a lighter sense. We discussed basically 4 areas: IFRS 16, ESG, IASB, and the fourth one is accountants special.
Yeah.
Somehow ESG and IASB concepts were interrelated. There was interesting concepts, new concepts, new things we learned. And accountants, that fourth part was also very much new for us and interesting. But since the beginning of the seminar, I was wondering to explore, trying to reach the connection between IFRS 16 with ESG and IASB vision. So if you can make us connect with ESG, IASB and accountants or with IFRS 16, I will really love to hear this. Thank you, Najam.
So the only thing was, because the only connection is that because I am in Pakistan, that is the only connection. I just wanted to share, what I've learned in the last few months, and always an incredible opportunity to remain connected with the ICAP members. And that's why, I thought.
Because IFRS 16, we used to hear somehow from time to time. But, when I learned about the seminar and I came to the seminar, I was wondering that I need to learn something which has some connection of IFRS 16 with ESG and IASB.
No, sir. The only thing which I wanted to cover on IFRS 16 was the penalty concept. But then I thought, would it make sense to include 5-10 minutes just as a recap? Because I really wanted to share the learnings which I learned. I was just telling you from one of the IFRS members. He was part of our board and he supported us with the evaluation of certain aviation contracts. And how brilliantly this person comprehended the concepts. I thought, it will be really good opportunity to share it with the ICAP members too, right? Because sometimes we are too obsessed with the book. We don't think here and there, and we were just, and this gentleman, he is a PhD as well, and like holding a position on IFRS committee is like quite a prestige, and this proves that these people are really knowledgeable, right? That was the only reason. Otherwise, my objective was to cover ESG and then the new developments in IS.
Thank you, Najam Saab.
That's good. That's
Thank
we
you.
found very something.
Thank you,
very
Wasim Saab.
unique.
Basically, IFRS 16 has changed the horizons of the accounting. They have changed the balance sheet by 14 to 16% for some sectors, and ESG is going to change the horizons as well. They are interlinked based on the changes they are going to put. IFRS 16 is an old concept now. During the audit tenures, we have already developed our IFRS 16 models, and now we just want to add the penalty area, which is a new one, which is ignored. Each and everyone during the audit season has already made their models of the IFRS 16. We just want to renew that, and the changes which IFRS 16 made to the horizon is the same level of the changes which ESG is going to made now in the future in a couple of years. Just last question, sir, please. Please introduce yourselves and ask the question. One question, please.
This is Azim Abid. So my question is related to you were talking about the economic bubble burst. So my question was that you were saying that we must record in the financials the difference between the book value and intrinsic value, that is a market capitalization.
Yes.
So my question was just that how the recording of difference will save the economic world from another bubble burst.
Difficult one to say, right? Difficult one to say.
I was just wondering, said how this will save us from another bubble burst.
Like all these valuation models and how the market perceives the value of your products and share price. It's a very different concept, and That's why, like, we as accountants, like, we try to hate these things. And the only thing what I could say here is that, in my opinion, IASB should do something to narrow some of the, some of the gap here. Yeah, that's the only thing I could add here. Unfortunately, if you ask me that how they reached to 3 trillion, I probably would have no answer.
Because market capitalization is purely supply and demand.
Absolutely.
So
what is the
it has nothing to do with the financial numbers. So that's why I was saying that this seems
it
to
goes
be
up and down, but always in that range, at least for Apple. And the problem is
Thank
that this can crash very, very quickly as well. Like, for example, if one bad thing on ESG, you can see how the numbers are gonna plunge, right?
Thank you, Najam Saab. Thank you
Thank
very
you
much
very
for
much,
your
sir.
time.
Thanks a lot.
Now I would like to invite Secretary NRC, Ms. Amara Shamim Gondal, for his closing remarks and the vote of the thanks, and a bit brief about the future. Thank you. Please, Amara. Sir, please have a seat. Have a seat.
Thank you very much, Najam Saab. Indeed, you brought a lot of new perspectives to us, the accountants, who always like to go by books. और जो हम academics के साथ हम उसके साथ बहुत ज़्यादा जो है ना वो stick on करना चाहते हैं. And definitely we are really grateful to bringing new concepts on table regarding IFRS, which we normally used to ignore. और which may be, जब हमारे सामने आते तो फिर हम कहते ओहो इसके बारे में तो कभी किसी ने बात ही नहीं की. So we are so thankful to you. And जो emerging हमारे concepts हैं, जो emerging हमारे areas हैं, उनको बहुत comprehensively you covered, and we are so thankful for that. And thank you for a wonderful audience here in person and those who are connected through Zoom. And NRC is thriving this time कि हम new से new ideas, new से new हमारे emerging concepts और जो हम इस वक्त face कर रहे हैं और जो हम future में face करने जा रहे हैं, हम वो try कर रहे हैं कि वो हम on the table लेकर आएं, उनको discuss करें, so that we should be better prepared कि जब भी हमारे सामने कोई चीज़ आए तो हम बिल्कुल ब्लैंक फेसेस के साथ उसको नहीं फेस करें. आज भी जब नजम साहब बहुत से क्वेश्चंस कर रहे थे तो वो बहुत ब्लैंक फेस के साथ बहुत शर्मिंदगी हो रही थी. सो नेक्स्ट टाइम वी विल होप दैट वी विल नॉट आंसर आवर नेक्स्ट presenters or valued speakers with such blank faces. So we are all geared up. A lot of new concepts we are coming up with data sciences, with hyper technologies, artificial intelligence, जो हमारे conventional concepts हैं, conventional topics हैं, उनके बारे में भी हम बहुत से sessions we are going to arrange regarding 6 unit में investment करनी चाहिए कि नहीं करनी चाहिए, फिर SME की leadership कैसी होनी चाहिए. So these are all new topics that we are coming up. I would also request all of you to go to ICAP website, and we have tried to put up a calendar where in every month जो हमारे proposed topics हैं वो हमने वहाँ पे put up किए हैं. जैसे जैसे हमारे sessions, हमारे speakers aligned होंगे तो हम with confirmed dates के साथ आपको बता देंगे कि किस date पे हम वो करने चाह रहे हैं. And please come up. All of us, all NRC members are at your approach. We are just a call away, I believe, and a message away. आपके कोई भी learning objectives हैं, so do talk to us. CPT committees are there in every city. जहाँ जहाँ पे आपको लगता है आप please उसमें ज़रूर value addition करें और जो emerging topics हैं, current issues हैं, ज़रूर उनको highlight करें. Soft skills पे भी हम बहुत ज़्यादा काम कर रहे हैं. We have planned many activities like presentation skills, and we are also going to come up with many soft skills related seminar sessions, courses भी हम लेकर आ रहे हैं Oracle पे, SAP पे. So stay tuned and keep following that ICAP calendar, CPT calendar. And with that note, thank you very much once again to Najam Saab, and I would like to hand over my mic back to Ahmed. Thank you very much.
Thank you, Amara, for the insight. Now I would like to invite Mr. Asad Feroz and Chairman NRC, Mr. Farooq Hamid, for presentation, for presenting the shield to our worthy guest and the presenter of the night. Please. शील्ड पकड़ाओ इधर से है ना। सीए पाकिस्तान पे आ गए। Thank you very much, Najam Saab, for your time, precious time, for the membership at large. Thank you very much, sir. Thank you very much, sir. Yes, I have gone through that session as well. It was a wonderful session and today was awesome. I really enjoyed it and learned a lot about it. Thank you. Thank you very much, sir, for your time, precious time. Now we close our session and members can have a cup of tea or coffee and we will come up with another session soon. Thank you very much for your time. Thank you.